On Thursday, Tesla stock fell by more than 8% by the time the markets closed. Tesla stock had entered bear territory earlier this week due to reports that the Fremont, California plant of Tesla was shut down and weak market sentiments. On Friday, Elon Musk confirmed this news about the plant. He posted the electric vehicle company's Fremont plant was shut down for 2 days this week due to parts shortages. But now it has restarted. During the temporary shutdown, the production of Tesla's less expensive sedan, the Model 3, was hit. The Fremont plant can annually produce 5 lakh units of Model 3s and Model Ys. Meanwhile, last week, Tesla reduced the price of its cheaper variants of the Model 3 and the Model Y, the latest in a series of price cuts. Last month, Tesla had stated that it might face a temporary impact from a global semiconductor shortage and logistics disruptions at ports. Tesla is not the only company hurt by this shortage. Several automakers, including General Motors, Volkswagen and Ford, are hit by the shortage of chips. This led them to scale down production. On Friday, Tesla's share was priced at $675.50 per piece during the closing session. NIO Inc. has kicked off Friday's session with an upswing after falling sharply on Thursday along the broader stock market. Rival Chinese EV maker Li Auto reported a surprising profit, and as both firms compete in different market niches, expectations from NIO are higher as well. If Li can sell more sport utility vehicles, NIO may show it can roll out more luxury sedans. NIO is a Chinese electric vehicle manufacturer and designer. Electric vehicles are now more mainstream and are seen as the future of the automobile industry. The other main trend in the auto sector has been the development of autonomous driving vehicles. NIO is developing the NIO EV, its vision for the future of autonomous driving. NIO says itself that the future is in smart, electric and autonomous vehicles, and we aim to lead the way. But investors have appeared to cool on the EV sector of late, or at least take profits after meteoric gains. NIO began 2021 at just over $50 and is now slightly lower at $44.33. Just for comparison, NIO began 2020 at under $5, so the negative performance for 2021 has to be taken into context. NIO will release fourth quarter results on Monday. Past results have shown strong sales growth. NIO's own investor relation website states, NIO delivered 7,225 vehicles in January 2021, a new monthly record representing a strong 352.1% year-over-year growth. Apple could soon announce a March 2021 product refresh event. It is widely speculated, if not a near certainty, that Apple will unveil a barrage of new products in the spring of 2021, as the company tends to do during the warmer season. The event date has yet to be announced, but will likely fall around the middle of March. Aside from the iPhone and a few laptop models, which have been refreshed very recently, almost anything else could happen next month. The list of potential headliners for the upcoming event is long. Leading the charge, both in likelihood and importance, is the Mac. In November, Apple unveiled its M1 chip, an internally designed piece of hardware that is faster and more capable than its predecessor. Along with it, the company also announced the new 13-inch versions of the MacBook Air and Pro. Now the Apple Maven expects to see the new chip powering other Mac models, including the 16-inch versions of the laptop. The most notable change, however, could come with the desktops. The iMac may very well get a facelift, as the new architecture allows for thinner and more elegant bezels. Another probable headliner is the iPad. In fact, some believe that the March event will be all about new tablets, first and foremost. The Cupertino company launched the new iPad Air, an 8th generation iPad, as recently as September 2020. However, a handful of other trims could be unveiled this time. The iPad Pro is the most likely candidate. The latest model was released just about 1 year ago. I believe that the March event, if confirmed, could be a catalyst for Apple stock. This is particularly true because of the Mac and iPad. Both have had an outstanding calendar 2020 of sales, especially the Mac. It will be hard for Apple to top segment revenue growth of 30% plus in 2021. To perform well in the new year, the company will have to impress through innovation and dazzling product specs. If Apple delivers the goods, investors could get motivated to buy shares ahead of another strong year of sales. Nokia is getting left out of the market's incredibly strong performance. Aside from the January 27 short squeeze from Reddit users that lifted NOK stock to a $9.79 high, the company has no catalysts ahead. Nokia's prospects in the telecom space are not entirely lost. Demand for high-performance networking gear is increasing. Mobile device usage is soaring and internet traffic volumes continue to rise. Nokia management must restructure its business to report higher profit margins. Nokia posted good gross margins and revenue in its fourth quarter. The stock failed to get a lift from the report. Strong buying volumes the month before at higher prices will leave a mark on its stock. Retail investors who overpaid for the stock will look for any opportunity to sell the stock, while long-term investors who missed the chance to sell the stock at between $7 and almost $10 will get frustrated. A growing worldwide ban against China-based Huawei is a one-time opportunity for Nokia. Growing competition in 5G and other wireless technology will encourage a country to protect its domestic companies. As long as the momentum for countries to ban Huawei remains strong, Nokia will have a chance to grow its wireless base station market. Without the Huawei tailwind, Nokia forecasts a strong full year 2021. Net sales will be between €20.6 billion and €21.8 billion. The company ended the fourth quarter with a strong liquidity position of €8.1 billion in cash and investments. It has no major debt due until 2024 and beyond. The healthy financial positioning suggests that Nokia may take advantage of its low stock price. Nokia has 5.61 billion shares outstanding. It could increase its earnings per share by buying back stock. Shares may fall to the $2.34–3 range in the coming months as frustrated investors sell. That gives Nokia a chance to lower the share float at lower costs. A buyout, or a surprisingly strong quarter would quickly put an end to the stock's weak performance. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.